guys, welcome to Quantsapp, and here we are again with another video. So first of all, if you are new to the video, so you can go in the description, there is a link below. You can successfully download and install this software. Okay, after successful registration, you will get free 25 tools here what you can use for your trading, for you to maximize your profit. Okay, now here in the learn section we have a video library, so you can see like all 80 pro tools here. We have many videos here, a pool of videos. Okay, so you can go through it, and these are available in multiple languages. Okay, English, Hindi, Marathi, Tamil. So you can choose your preference at any point of time if you want to connect with us, and or you are having any kind of doubts. So you can go here, and in the support section we have our calling number and mail. So you can write us down, you can call us, and we will be there to sort your problem out. Okay, good. Now coming back to today's topic. Okay, now when we are trading in a market, either we are doing intraday or either we are doing a positional trade, right? What is the first thing that we have to see? Like I'm going to start a trade. Now I have to find a direction. Now we have made multiple videos on how to find the direction. So you can see that. Now suppose you have a direction. For example, I have a direction that my market will go in the bullish direction. What will I do? I'll make an entry, right? Now I'm making an entry. Now, what is the next thing that I should do? I should put a target and stop loss, right? So that is the first thing, and that is what we say risk management, right? So that is the risk management. I am managing my risk. I am managing my risk, and managing my risk by what? Managing my risk by putting a stop loss, right? So that is called the risk management. So when I manage my risk, I put a SL and target, right? These are the two things. Now what is the what is the third thing? I have entered in my trade, I have put my stop loss and target. Now what is the third thing? So the third thing that comes, that is the strategy. Like with which strategy are you going to trade? Are you going to trade with two lots because you know the market is not that much volatile? Okay, so either you will trade two lots for how many range, for how many points, or your strategy is I'll trade for only 10 points and with 7 to 8 lots in BankNifty or Nifty. Okay, so there are various kinds of strategy. One person is trading with one lot and he is trading for like 50 points. Okay, so he must be having a good range, like the market can move this much wide, the market is very much volatile, so that is why he is only trading with one lot. The person who is trading with 10 lots, he is thinking that the market is not that volatile. I will do scalping, trading with a huge quantity, only going for the 10 to 15 points. So that is one of the strategies. Okay, so there are multiple strategies. But how to find the optimal strategies that will reduce my risk to the lowest? Okay, and again there is a point. If you are new here, so there are so many strategies. They are naked calls, so you can take a naked call. Naked call means if you are having a bullish perspective, so you can just buy a call. Okay, so that is the naked call, just naked call. So I am buying a 100 call. If a market will go above this, so I'll get a profit. But what if your market will go down? Okay, so you will face a loss. So it means you are working on a 50-50 probability, right? And this 50 probability will work in your favor if you are a good experienced trader. Okay, but if you are not a good experienced trader and also you don't have any knowledge of derivatives, then you will surely be making loss while you are trading in the share market, right? So that is the thing. So now here we are, and we will tell you today a very optimal strategies that will reduce your risk to zero. Okay, now let's see what it is. Okay, so for example, you must have heard about hedging. Okay, so when I'm doing hedging, so what I do, if I'm having a perception that the market can go in the high direction, so what I'll do, I'll buy a 115 call option, right? I have buy a 115 call option. So whenever my market will go above from this level, so I'll get a profit. I'll generate a profit, right? But what if the market will go against my direction? So for that, what I'll do, I will sell a call option also. But what I'll sell a low premium, because my perception is the market will go high, but still there are 20 to 30% chances that the market can go against my perception. So for that, what I'll do, I'll sell a low premium call option. So I'll sell a 60 call premium option, right? So I'll sell this, right? Now if my market will go in the higher direction, okay, if my market will go in the high direction, so I'll get a profit. And obviously this, if I'm selling this, so this will go down. But still, if it will go from 60 to 0, okay, so I'll face a loss. But this loss will not be that much how much profit I'll be making from this strategy. So if I'm making 1200, so I'll face a loss of approximately 200 to 300. Okay, so if I'll minus this, so approximately I'll be getting 900 to 1000 rupee, right? At any point of time, if my market go against my perception, so what I'll face a loss, right? I'll face a loss. I'll be facing a loss, for example, 1200 rupees loss, right? But I have also sold a call option of 60. Okay, so it will give me a profit. So it will give me a profit of approximately 500 to 600 or more than that, I guess. Okay, I'm not calculating that deep right now. Okay, so you see, I have reduced my loss when the market went against my direction, against my sentiments. So I have reduced my loss by hedging my position. So that is why we hedge. But if you are new to the trading, no issues. What we have here, if you will go to the Quantsapp application, right? So in the track option, first of all, you have to open the open interest here, right? When you will analyze the open interest, for example, right now the Divis Lab stock is open. Okay, so I can see here in Divis Lab, I can see if right now the market price is 5139, right? The market price is 5139, okay? And below 5139, there is a level, okay? And you can see there are some sellers who are taking exit from their position, right? So that is one of the thing. Again, when I'll see the put strike, so I can see there is an addition here. So it means the put sellers are taking entry in that position. It means they are having a perception that the market can go in the positive direction, right? So what I'll do, I'll make a long position here. I'll take my entry from this position. Let's see the chart of this particular stock, Divis Lab, okay, so that we will make my entry, okay. Right, so then you can go in the analyze section in the chart and order, okay, and I'm applying a time frame of 1 hour. You can apply your own time frame, okay, with which you are comfortable. Right now I can see here, if I want to take an entry, so what will I do? For example, right now I'm taking an entry at 5139, right? 5139, and I can put my stop loss at this lower because this is the swing low. So the low is 567, so I'll put my stop loss as 5070, okay, 5070, and I'll put my target to 5200, something like that. Okay, so let's see what will be the perfect strategy that will give me no loss or that will reduce my loss. Okay, so what you have to do, you just have to go in in trading, and there is a optimizer, okay, find strategy. So you just have to put your stop loss. So for this one, I'll put my stop loss like 50 and 70, okay, so 50 and 70, and right now it is going to 5139, so I'll put my target as 50 to 220, okay, or you can choose 50 to 250 also, 5250 also, right? Now if I'll click here, get a strategy, so these are the strategies I'm getting here. Okay, so in the long call, I'm getting a risk reward ratio of 2.01%. In the call ratio back spread, I'm getting a risk reward ratio of 3.30. Okay, so that is why sometimes hedging very is important. Okay, because here I'm getting a risk reward ratio of 3. Whereas if I'll take only a naked call, okay, long call, so at that time I'm getting a strategy of risk reward ratio of 2. Okay, similarly you can see in a bull call spread I am getting a risk reward ratio of 12. Okay, and there are 2 more strategies that is giving me no you can say there is no risk reward, there is no risk. Okay, so you can directly go for that also, bull call ladder, okay, and bear call ladder. So I think there might be some strategies that you don't know about, but still you can go with the best strategies that you will find here. Okay, now in these strategies it will give you, for example, if there will be best implied volatility, so at that time I'm getting a profit of 20,651, right? In the worst implied volatility also, I'm getting a profit of 642, and just with a SL of 13,864, right? And if there will be a average IV, so at that time I'm getting a profit of 15,000, and the stop loss of 7,000. So you can say I'm just getting a double of my risk. So that is you can say a good strategy for you. You can go with other strategies also. Okay, you can go with other strategies also that we have seen here. Okay, so this is how this will give you a perfect strategy for you. You can analyze those strategy. It will basically give you five strategies. Okay, so you can analyze those, like which is the best strategy for you. Okay, and here it will also give you a margin 56,810. It will vary with broker to broker. Okay, so you can see that also, right? So this is how you can choose your strategy that will be of limited risk and provide you a good profit if you are a new trader. So this is the tool for you. Okay, for these type of informational video, okay, you can just subscribe to the channel. Okay, thank you so much. We'll be back with another video. This is your trainer Ankit Singh Rawat. Have a good day.